Hello everybody, I'm your boss, Joe Boss, and welcome to another Daily Plan. It's Monday, April the 8th. Hope you all had a great weekend. We were fairly productive in the trading group, and I was fairly productive on the programming side of things. I finished an update for one of my indicators, and went ahead and during the Outlook review meeting we have in the trading group every Saturday, I went ahead and wrote this whole little document covering major points from a bunch of outlooks that we read. It was like a 3-hour, 2-hour meeting. It was a long meeting, but taking those notes was quite helpful. I don't know if you guys can read this or not. I can't zoom in on it. But there's a new feature in the Brave browser that allows you to use Claude Instant to just load whatever you have open on your browser and get some AI chat out of it. So I went ahead and I tried this out, and I just asked it, hey, summarize this page. What are the most important points in this Outlook's review document we did from Saturday? And I think it did a pretty good job of identifying the key points, and I'd like to hit on all these throughout the stream because they relate to everything that's in the title here, all the central bank meetings that we have. I think it actually missed ECB here. We can go ahead and ask it to summarize the page again, although you can see here in this summary it mentions that, and look at that. Cool. Looks like it just repeated itself. Yeah. Again, I'm guessing this is some like free AI implementation that Brave has set up, but this is a nice little cool feature. And speaking of cool features, let me go ahead and show you the latest features here in the probability pivots before we get started. First off, nothing has changed on the front of the indicator, except when you go to a weekly chart, it will now automatically load quarterly pivot probabilities. Check that out. So right here, what we're looking at is the seasonal probability quarter by quarter, at least here on the dollar CAD or any chart that we pull up, of finding a high between any two pivot points. So this here is saying a lot of our highs is below the quarterly R1 pivot. We can change this to low. And it seems like 100% of the time, sometime this quarter, we do get some lower value this quarter. That is over the last, I believe, 21 years. I'm going to open the strategy dashboard now. This is the premier major feature that's been added to the probability pivots. And now we have this dashboard here. I'm going to go ahead and full screen this. And you can see this strategy dashboard summarizes some descriptive statistics about these percentages for the high, the low, and the close. So this says, hey, what's your chance of getting your entry, hitting your entry? What's the probability of that? What's the probability of hitting your exit? What's the probability of overshooting your exit, getting your stop loss hit, going into drawdown, closing between your entry and exit? That's what this close mid here is. And then closing exactly right at the target. And when I look at this, it seems like the range bearish odds are actually really good here on the quarter. Those are some pretty high odds here on the quarter. If these yield spreads weren't so positive, I'd be a bit more keen. But we have some things to talk about when it comes down to the Canadian. So first off, let me bring up the DXY, not that one, the one on TradingView, the TVC, TradingView chart. Go ahead, let this thing load in. That's for the month, and you can see all the statistics in the dashboard update to whatever probability pivots that you have pulled up. And we'll go ahead and look at how things are on actually I'll go ahead and go back here, set this to 1 week, and adjust the auto time frame that way. So then we're loading a lot of historical data. Also, I'm going to do this for the DXY. One thing I like to do actually is select after year here on the seasonal filters, set 1980. Essentially what this does is it only samples seasonal data from the year 1980 and after. There's just some kind of buggy looking data before 1980, and we still get 44 samples to deal with here for our weekly data. So this looks like a lot of lows do come in below 104 still for this particular week. If we go ahead and look at the high data here, and then we'll look at the dashboard to see how the strategies line up. Still looks like the range bearish one has the best odds of hitting and overshooting your targets there. But only 22% of the time are you hitting this entry spot right here between our 0.5 and our 1. So not terribly great entry odds, but reasonably good historical continuation odds. But one thing to mention, closing in the middle of the bias, yeah, there's pretty good odds we end up closing between that R 0.5 and S1.5 pivot. So somewhere around here, if I bring up the closing odds, yeah, you can see that's where most of our closes are. So the dashboard just helps with saying, hey, you have a lot of your odds in these particular areas. Again, if you want to load up a particular bias, so let's say we want to check out the range bearish bias because those odds look particularly interesting, just go down here to the pivot point bias setting, go to range bearish, and these odds here should stay the same, and the chart will update to show us the entry and exit locations. Yeah, and you see this overshoot thing here, range bearish, 56.82%. If I change this to low data, an overshoot here would be past the exit. So if we load up our low data, this should say, yeah, 56.82. So this data here on the chart just summarizes the open, high, low, close odds for you. So then, if you do or do not want to actually go through changing all these settings manually, you have something that you can look at here at a glance. It does require that you understand the odds fairly well, like where your entry and exits are for different pivot point biases. And what is cool about this also is you can add other strategies here. So we can also put in continuation odds. Makes the dashboard bigger, but it also gives us the odds for pretty much every single set of pivot point strategies here is lined up, and you can hide whatever statistics you're not interested in. And yeah, the dashboard is kind of big right now. That's just how it is. I'm going to do another update for the probability pivot points and add some more advanced statistics, hopefully some timing based ones shortly here in the future. For now, I'm going to hide the strategy dashboard so it's a bit out of the way. I'm going to go back to the unbiased pivots. And let's pull up our expectations. So last week's expectations were pretty bang on. Looks like I didn't set expectations here last week on the US dollar, mostly because these economic events are going to be quite volatile. So if real quick, there we go. go back to this bit of data over here. There we go. And let's do a text wrap on that so that's easy to read. So this is the main concern I have on the US side. US inflation data for March will be closely watched to see if inflation is cooling as expected or if it surprises to the upside again. This would impact expectations for Fed rate cuts. So the nominal expectation for inflation is for it to effectively go sideways. The US inflation coming up here. And to be frank, when I look across the board here on a lot of these US dollar pairs, I am not too hopeful. A lot of these yield spreads are still terribly, terribly negative here. I mean, you can look at this on the daily yield spreads. This is all bad, 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 bad. Pretty much flat odds here on the probability pivots. And if we check out the range probabilities, go ahead and update this to a weekly time frame. You can see most of the time your highs are coming in right around here. It's fairly range bound. And most of your lows are coming in right around here. So this is non-seasonal data. If I go to a 12-hour to get a little bit more of a granular view of how things look, you can see my expectation that I drew from last week, April the 5th, which is the last trading day of last week. You set a bearish expectation here, and for the rollover to effectively come in now or probably in the next 24, 48 hours, because we do have some economic events coming up here. So let's scroll down a little bit. So the first set of events coming up here on the 9th, Japanese PPI, that's expected to increase. Yeesh, the forecast on year-over-year numbers is really high. Then you have RBNZ. So let's go ahead and check out New Zealand USD. I set a bearish expectation on this one as well. However, the yield spreads have begun to improve on that 12-hour chart. Not so much on this daily chart. A lot of long-term bearishness on those yield spreads is not happening. Most of the commentary that I've seen around the New Zealand dollar is that the yield spreads are expected to continue staying negative. RBNZ is expected to stay on hold, if not be on the more dovish side right now. The rate cut expectations for the RBNZ are generally holding firm, but there is a risk that you do see that the RBNZ cut sooner than expected as economic growth in New Zealand starts to fall more rapidly. So this is not a great outlook for the New Zealand. Seasonality wise, this is the seasonal dashboard. I haven't pulled this up in a quick minute. So this is usually the seasonal path day by day that New Zealand dollar takes. Usually these next couple of trading days have high likelihood of seasonality, but that's usually because the economic events that we see over the next 2 to 3 trading days are usually quite risk on. But the expectation for these events is not risk on. So we might see some non-seasonal moves here, some more bearishness, some more flat moving work. The seasonal bullish expectations kind of cut off here around the 12th trading day of April, which is the 16th calendar day. And then it essentially gets short for the rest of the month here, except for this little area right here that you can see in the chart from the 20th to the 22nd trading day of April. So that's like the pretty much end of month right there at the end of the month of April. And let's bring up our ranges. All right, we hit a likely high there for our weekly range. Oh, I wanted to bring up the probability pivots. And not so insignificant chance that we're finding our high somewhere around here right now this week. So maybe it does go a bit higher. I'd be concerned if we do move past this R1 pivot of essentially reaching the 61 handle. So I'll go ahead and draw that in if I could. Go ahead and timestamp that for today's date because we want to keep track of our expectations. And then I need a little arrow here that points up to 61. So this would be if we had good expectations going into RBNZ, if they were more hawkish, if they threatened rate hikes for whatever reason. Their inflation seems to be holding at the moment, and their manufacturing really still is kind of taking a hit. It's not growing as fast as the rest of the world. There is some hope in New Zealand and Australia because if I go back to this outlook, nothing here on China at the moment. We did have manufacturing PMIs out of China, and those turned out great. We also have Chinese inflation coming up here on, what day is that? April the 10th. So that is right here on this calendar day with the blue line. I'm going to go ahead and make that a little thicker so that then you guys can clearly see that on the video. So right there is the timing for when this Chinese PPI and CPI year over year are expected to print. And it'll be later in the day for me when that comes in. This, if it does print well, essentially as expected, this could help, right? This could help. But China does want to get more consumption in their economy, and that consumption kind of requires a bit more inflation. Yeah, it's kind of a mixed bag. I'm not too sure Chinese CPI and PPI are going to have a huge impact. There probably is a risk of a jump in inflation metrics just across the board as commodity prices have continued to rise. If I go and I check out crude, you can see it's still holding up this area here above 85, and it's still got good probabilities of going higher. And then on the month of going even higher. Next week, this is what's really cool about a lot of the indicators that I build. You can see next week's odds, so then you can prepare ahead of time and say, okay, I want to probably stay bullish this week, but then going into next week, I probably want to take a more bearish stance, probably around this R0.5, R1 pivot. And real quick, just want to check out the likely highs here. Yeah, so it looks like this area up here, which conveniently is the probability weighted pivot. See this probability weighted pivot line right here, the orange dotted thing, PWP, that says 90 right there. That thing is a weighted pivot. So it takes all these probabilities that I currently have on the chart, and it uses these probabilities as weights against all of these pivot points. And it creates kind of like the mean of this data that we have here. So generally speaking, I'd probably set that sort of expectation. And then when I look at these ranges, which is continuous non-seasonal data, I see a bit of an overlap. Specifically, this spot right here that says, hey, you get a cluster of highs for any given week. So this is your more significantly bullish weeks that probably get a high around here. And then if I switch back to the probability pivots, you can see the probability weighted pivot is right at that spot there. So if inflation continues to rise, I would not be surprised to see us jump all the way up here, and then that's gonna send April's inflation kind of through the roof, and it's gonna make the FOMC really, really hawkish. It's gonna kind of be unavoidable. And you know, all the oil producing countries out of OPEC are going to be laughing their butts off because they've cut supply so much, and it's one of the major contributing factors here. In news recently, we had some Ukrainian attacks on Russian oil supply, oil producing manufacturing facilities. There's a lot of conspiracies around whether or not it was actually the Ukrainians or not. I'm not going to get too into that. I'm just going to say, hey, that's the news, and continue on from there. Let's see, what other central banks do we have up? We have the BoC. Yes, the very first chart of the stream. Bank of Canada, oh, Canada. Yeah, this thing is probably going to end up going higher because I do expect US CPI to print higher. I expect the Bank of Canada to be dovish. And if we scroll up here, here's the Bank of Canada rate statement and monetary policy report. This is due on April the 10th, which is that bar right there. So right here, if we do get a more, also Canada's economy is slowing super heavily. And something interesting, the correlation between oil markets and the Canadian dollar is getting weaker over the long run. Maybe short term, you can see jumps and spikes related to oil. But when you compare this chart, which has been just slightly drifting sideways, it's very, very choppy. Compare that to, you know, crude, which has just been going up and away. You can see while this asset's been going up, USD CAD, the Canadian dollar has been weakening. So this would be a slight, this would essentially be no correlation if I pulled up the correlation coefficient. No strong correlation over the medium term, at least. Over the long term, people are pretty upset with Trudeau and how he's kind of handled the economy there in Canada. They really want the opposition party leader to go and take control. And as far as the Bank of Canada goes, yeah, expectations are for them to be dovish here into the next meeting. Oh, hold on. Here's the CAD over on Owanda is what I wanted. There we go. And let's go to a 12-hour real quick, get a more granular view of the ranges. Yeah, looks like so far we are meeting our expectation of down into the first part of the week. If I go ahead and I bring up the probability pivot points and look at the lows here, and I'm going to do one more change here so you can see a lot of lows are roughly here for the current trading week. One thing I am going to do is actually, I'm going to turn off all these statistics in the dashboard. I'm going to turn the dashboard back on. And this is going to give me the old style table that just tells me the current number of samples, the current period that we're sampling from, which is week 15 of the year seasonally, and next week. So I just wanted that little thing. So that's how you get the kind of quote unquote old table back. If the new version's too big, if you're, if you're trying to view that huge table on your phone, you're going to have to play around with these settings to try and get it to fit. It's going to be really, really big. You really need to look at it on the screen. Otherwise, if you do this to your settings, you can at least get this little nub, information nub. And that can be quite helpful. That's what I want right now. The other thing I'm going to change here is the pivot type. We're currently using traditional pivots, but I've been trying out the ATR pivots recently, because I find that they give a slightly more granular view on the pivot points front. And you can kind of see what I mean, right? A lot of lows for a given week usually occur right here. You get this sort of thin area right here for this particular week, and then spikes. These are pretty heavy. You can see how far down that probability weighted pivot is for this particular week. So if we do get any hawkishness, relatively good Canadian data versus the United States this week, that would send this lower. It would probably reverse these yield spreads. These yield spreads being very, very positive right now does not really support that fact. We got the positive yield spread flip right around here. So if we now look to the upside and see how high we usually go for this seasonal period, there's a very clear cluster right here, which is why we set these expectations last Friday on April the 5th. So let's see how well these expectations on the Canadian dollar hold up. And let's move on to the next thing here. So for that, let me go ahead and take a quick look at my notes. Commodity prices like oil, metals, and grains have risen recently due to supply constraints and geopolitical risks, but may be nearing a short-term peak. Well, you know, compared to what we just saw here for our week ahead probability pivots, I think we are a bit ahead of the curve on that one, don't you think? Here, I'm going to go ahead and sample more historical data. Depending on the time frame you pull up on TradingView, it can impact the amount of historical data you can pull. Yep. Decent amount. Most of your highs are coming here below R1.5. That's still quite a big range, in my opinion. But if you move up here, it means maybe you hit the high 80s, maybe you hit, you know, close to 90 next week, and then it falls over. We can actually check this out on the month and see generally. Well, actually, I can just hit that auto time frame, and this will update the pivot points period for the month. Also, I'm going to do one more thing. I'm going to go back to traditional pivots here. Let that update real quick. And yeah, decent amount of highs up here. I had to switch back to traditional pivots because the volatility is very, very, very expanded. I find average true range to be quite good on these weekly pivots. Okay, there is one. Oh, hold on. We have Bank of Japan, right? Let's see here. This is just the news. News. Wall Street kicks off the busy week, mostly flat. US stocks are flat. Sounds right. Canadian stocks close marginally below record high. Good to hear that for the stock exchange on Canada. Let's see here. There's the US CPI. Oh, year over year is expected to increase. The month over month number, I think, is going to surprise to the upside. I'm not so sure about core. Let's see here. Bank of Canada. FOMC minutes. If Chinese CPI and PPI do well, we'll probably see Australia and New Zealand do well as well. And then here's ECB interest rate. ECB, you know what? If I go here and I scroll, check that out. So this is pricing changes for 2024 cumulative in basis points. So this dark blue one here is the Fed. This light blue one is the ECB. This is from Nordea. This is a publicly available outlook here. Essentially, what we're looking at on this chart is the expected rate cuts going forward especially from September this year on to March of 2025. The ECB is expected to do a lot more rate cutting, essentially cutting ahead of the Fed. And there was one more bit on the ECB, if I don't remember. Yeah, this was a particularly nice thing to read here, if I could. I really like the sentence, this little paragraph here. In fact, I copy pasted and posted it in the central bank's chat here on the Plan the Profit Discord. Let's see here. Where is... Yeah, this is it. On the question of whether the ECB could cut rates before the Fed, we believe this discussion is overdone as central banks are running independent monetary policies. And as such, the ECB could cut rates before and faster, as also priced by markets. Our house call is for the Fed to still cut in the spring, so they're talking June here, though the risks are weighed toward a later start. So they're talking about September here for the Fed. Importantly, the key question is not when central banks will deliver the first rate cut, but rather why. And I see this sentiment brought up time and time and time again. Let me bring up the DXY. It's very important to understand that, hey, just because it's a little different when central banks cut rates into a recession versus when they're cutting rates into a strong growing economy that's meeting all of their mandates as a central bank. You know, low inflation, low unemployment, and high growth. So if you have high unemployment and high inflation and low growth, guess what? It's going to keep rates higher for longer. In the United States, we have unemployment staying essentially flat, drifting a bit lower, hopefully, over the forward period here. Inflation staying relatively sticky, if not re-accelerating here. And growth is actually increasing, especially in the manufacturing sector. And continuing on here, however, imagining policies diverging for longer is more difficult because ultimately whatever drives decisions at the Fed will spill over to Europe and affect the Eurozone as well. So in the short run, the ECB could easily deliver a couple of rate cuts, even if the Fed stays on hold. But then maybe over the longer term, ECB and the Fed get on kind of the same policy path. Okay. Real quick, let's talk crypto. We are 11 days now from the halving. So let's see here. If I draw out 11 days, yep, we are still targeting April 19th, April 20th to be the day that the halving occurs on. So far, so good. And look at this difficulty adjustment that's expected in 2 days. 3.76% difficulty adjustment. Wow. Everyone is turning on their miners to participate in these last few blocks where the reward is, what, still 6.25 BTC, if I recall. And this next halving is definitely going to take a hit, man. I wonder how it's going to impact miners specifically. I'm not so concerned about the price. There will probably be some hype around the halving, and I'm sure some people make some good money off of that. But I would not be surprised in a situation where if Bitcoin doesn't reach like 75,000 plus and stay above that for essentially the next 2 months, a lot of miners are going to have a very, very hard time staying afloat. Because now you're getting paid half as much Bitcoin once the halving occurs. and the difficulty stays the same, either Bitcoin's price has to go up to accommodate the margins for the miners to stay profitable, or you end up seeing miners exit the mining business, selling off their allocations and selling off their Bitcoin to, make their venture capitalist investors whole. And let's go ahead and check this out. Check that out. Swap contracts for the FOMC apply around 60 basis points of easing this year for the FOMC, implying 2 cuts. The first is expected in September, according to pricing. On Friday, the chance of a third cut remains above 50%. So that'll probably be June or July. We'll see. And by we'll see, I mean we're going to have to check how inflation and unemployment move over the next 2 months here. These are kind of the 2 critical months. It's not looking good going into the summer. There's a little blurb that I wrote here. Yeah, there's a particular risk around Mexico's economy in the United States that could make goods inflation go significantly higher. But I'm going to read this section here because I feel like I still need to do more research on this thesis around Mexico's economy. So this risk around Mexico, in conjunction with risks of higher U.S. manufacturing goods prices. The reason why manufacturing PMI in the U.S. jumped is because more manufacturers were passing on their goods prices to consumers. So that's inflationary. And consumer inflation also rose. The summer of 2024 could see another bout of U.S. inflation reaccelerated from the price of goods instead of services. And if services still remain sticky going into the summer, as goods inflation begins to reaccelerate, I would not be surprised sometime towards the end of May for central bankers to start getting more hawkish in their commentary, explicitly saying, hey, we might need to do another rate hike here because these prices are now still getting out of control. It doesn't seem like monetary policy is kind of managing this well. And imagine the Forex market's condition on US dollar strength if all these central banks are still cutting or holding at their current rate while the Fed is threatening another hike. I mean, that's probably going to bring you down to the all these Fed rate features that do the probabilities for how many cuts we're going to get. If that situation occurs with the Fed threatening another rate hike going into the summer on higher goods inflation and stickier shelter and energy inflation, we'll probably end up with like a 50-50 probability of one rate cut or a 50 basis point rate cut like in December, or we'll start to see more rate cuts getting pushed out into the first quarter of 2025. Yeah, big ordeal. And this is more stuff on Mexico. If you're in the trading group, you'll get access to those notes. And I think I've covered pretty much everything I wanted to. I know I didn't cover every single chart, but remember, you guys who are watching, you can always ask me during the stream to check out an asset. Oh, looks like we had our jump here on the yen. There's still some more upside potential here going into the middle of the week. We set bullish expectations on the dollar yen. Essentially, this is a situation where if the BOJ wants to play chicken, economic chicken with traders, they sure can, because traders can just keep going long and trail a stop as the thing keeps going higher and higher until the BOJ, I mean more specifically the Ministry of Finance, the MOF, actually does some sort of currency intervention. So I'm expecting us to trade above 152 for it to make the headlines and all these articles to come out saying, oh my God, we're above 152 on the dollar. Yeah, no, oh my God. And then we'll see, mid to high 152s. And if the Bank of Japan still doesn't do anything at that front, it's just, okay, next level. Does the BOJ interfere? Okay, next level. Do they interfere or not? Okay, no, next level. So I have a feeling we're going to be doing this stair-stepping that looks like this every 100 or so pips. Essentially jumping up, consolidating, to see how the BOJ reacts. So then if there's a jump up and the BOJ reacts and sends us down to 300 pips, well then no problem. You have your stops set up somewhere in the middle of that last jump higher. And there you go. Trailing stops in this situation seem really, really, really good as far as strategy goes. Because I know some guys are saying, oh, I'm just going to stay away from this because it's like 50-50. I don't really know when BOJ is going to react. I mean, buying this consolidation here and just setting a trailing stop outside of this one wick right here, outside of that one wick, trailing stop has been pretty good. And I mean, there was some people in FX channel saying, is this the Bank of Japan intervening? Is this the Ministry of Finance intervening? No, it wasn't. So it got back up and we went to another high after that kind of FOMO was cleared. Alrighty, you guys. I'll go ahead and say thank you all very much for watching. Hope you enjoyed the stream. If you're interested in these indicators, go into the description and start your free 10-day trial. And I'll see you guys in a bit.